everyone, to this Wednesday edition of Inside India. I'm Sri Jegarajah. Your headlines: President Trump signing orders to cushion the blow of auto tariffs. Days before a 25% round of auto import tariffs are set to kick in, and as he marks 100 days in office. U.S. Commerce Secretary Howard Lutnick tells CNBC the administration has reached its first trade deal without revealing the country.
I have a deal. Done. But I need to wait for their prime minister and their parliament to give its approval, which I expect shortly.
India's finance ministry warning of risks to growth from the trade war and geopolitics amid heightened tensions with Pakistan. Indian markets join us in about 45 minutes' time. Let's give you a sense of what to expect and take a look at Gift Nifty futures. And we are looking at an opening number in the region of 24,322. So basically little changed from where we left off. And a headwind for this market is going to be the Indo-Pak tensions, which do appear to be unfolding and escalating. Remember, last week they really did start to permeate the psychology and sentiment of the Indian markets. At the end of the week, the Nifty 50 did drop below the 200-day moving average. Elsewhere in the broader APAC markets, this is how we stand, and shares really struggling to find direction. There are a couple of narratives here. President Trump moving to soften the blow from auto tariffs. We heard the Commerce Secretary talk of progress towards a first trade deal, but it's very clear that the uncertainty is starting to show up in the earnings parade. And the data, UPS cuts 20,000 jobs, and that is clearly going to have implications for April non-farm payrolls when they do materialise towards the end of the week. So that could really fold into the narrative too. Wall Street ending in the green overnight, however, as President Trump signed orders to cushion the blow of auto tariffs. It comes as he marks 100 days in office, during which the markets have been on a roller coaster ride. All three major indices down between 7 to 11% since he was inaugurated in January. Trump's signing off the auto tariff relief coming just days before a 25% round of import tariffs set to kick in on auto parts. Automakers will now have 2 years to boost the percentage of domestic components in vehicles assembled in the United States. The president touting his administration's deals, investments and overhauls so far at a rally in Michigan. He also spoke about China and promised that things will work out.
With my China tariffs, we're ending the greatest job theft in the history of the world. China's taken more jobs from us than any country has ever taken from another country. And that doesn't mean we're not going to get along. We'll get along with China. I mean, the tariff now is at 145%. So essentially, that's a big difference between that and zero. But I think it's going to work out. They want to make a deal, and we're going to make a deal.
In the meantime, U.S. Commerce Secretary Howard Lutnick weighing in on who's working with China and hinting on a first post-tariff trade deal.
Treasury Secretary Bessent is focused on China. That's his portfolio. He's got to get something done with China. And my portfolio is the rest of the world's trade deals. So they are coming.
That's a big portfolio.
Oh, it's the greatest thing, because we have every country in the world, just like Donald Trump has said, who wants to do a deal with us. Now, here's the point. I have a deal. Done. But I need to wait for their prime minister and their parliament to give its approval, which I expect shortly. I'm not going to tell you what country.
Many do suspect this deal could be with India. President Trump also reassuring it could happen soon.
India's coming along great. I think we'll have a deal with India. The prime minister, as you know, was here 3 weeks ago, and they want to make a deal. We'll see what happens.
India is leaving no stone unturned, however, in trade negotiations with the United States. Reuters reporting that New Delhi could offer a rare forward most favoured nation clause to Washington. India has already made some concessions in various sectors to avoid the tariff blow. CNBC TV 18's Abhimanyu Sharma filed this report on the ongoing talks.
On the India-U.S. trade talks, government sources have indicated that an interim arrangement is being looked at on trade and goods, which could take place as part of early mutual wins in case both the sides agree. The initial focus would, of course, be on goods and non-tariff barriers flagged by the Indian side, which includes the marine sector. The U.S. had suspended the additional 26% tariffs on India till the 9th of July, and both the nations are intending to take advantage of this window to push the trade talks. India and the U.S. are slated to hold sectoral engagements for the proposed BTA from the end of May 2025. The Commerce Ministry had held a meeting with the American officials in Washington, D.C. between 23rd and 25th of April, in which it has indicated that discussions took place on issues like tariff and non-tariff matters. Discussions were also held on the pathway for conclusion of the first tranche of a mutually beneficial multi-sectoral BTA by the fall of 2025. The ministry further indicated that productive sectoral expert-level engagements have taken place virtually, and in-person sectoral engagements have been planned from the end of May 2025. It remains to be seen how early the negotiations are going to begin and what are the issues which are going to be ironed out initially.
US is also calling on India to de-escalate rising tensions with Pakistan. US Secretary of State Marco Rubio is expected to call his Indian and Pakistani counterparts soon.
Regarding the Kashmir situation, India and Pakistan, that he said we are reaching out to both parties and telling, of course, them to not escalate the situation. The Secretary expects to speak with the foreign ministers of Pakistan and India as early as today or tomorrow.
Tensions have been flaring up between the two South Asian nations after a deadly terrorist attack on tourists in India's Kashmir. Prime Minister Modi chaired a high-level meeting with top defence and security officials. India has shut down over half of the tourist spots in Kashmir as investigation into the attacks continues. A key water-sharing treaty and trade with Pakistan has also been suspended. Some reports say India plans to ramp up economic pressure on Islamabad, asking its allies to block shipments of Indian goods going to Pakistan via their countries. In the meantime, Pakistan calls allegations of involvement in the attack baseless and warns military action by India could happen soon.
Pakistan has credible intelligence that India intends carrying out military action against Pakistan in the next 24 to 36 hours on the pretext of baseless and concocted allegations of involvement in the Pahalgam incident.
India's finance ministry is sounding the alarm on risks from geopolitical and trade tensions. A monthly outlook report says uncertainties from global developments pose a key risk for the country's growth outlook. The International Monetary Fund, World Bank and Moody's have already lowered their growth forecasts for India for the current and next fiscal year. Let's talk more about the state of India-Pakistan relations. Bring in Dr. Christopher Snaden now, independent political analyst and also the author of Understanding Kashmir and Kashmiris and 2 other books on the subject. Christopher, thank you very much indeed for joining me. First of all, India and Pakistan have been through this type of retaliatory spiral before. How severe would you characterise this particular flare-up?
Severe at the moment, Sri. We don't know what's going to happen. The Pakistan Information Minister, as you just showed, is expecting a retaliatory action from India, and India is almost certainly compelled to do that now, given the rhetoric that they've said and suggested about this particular movement. It's serious, but it's yet to fully unfold, so it's one that we're watching.
Despite international calls for de-escalation, what now are the odds of India launching punitive military action against Pakistan?
Oh, well, odds is an interesting term. I think they're fairly high because, as I said, the rhetoric is such that they've almost got to do it now, otherwise they will lose face and look a little sheepish perhaps, and also won't satisfy their domestic constituency, which is very aggravated, very angry, and which is baying for some sort of Pakistani blood in response to Pahalgam.
Is there any conceivable diplomatic off-ramp to this?
Well, Mr. Rubio is going to talk to the two foreign ministers today or tomorrow, your report said, and there will be significant international pressure, if you like, certainly support and encouragement not to do anything that would aggravate the situation. So not just the United States, but nations like mine, Australia's, will be countenancing that India and Pakistan should try and lower the rhetoric. The United Nations Secretary-General has also counselled restraint. So there will be a lot of nations saying around the world, please don't do anything to aggravate the situation. In terms of India and Pakistan talking to each other, that seems highly unlikely, although I think there is a meeting of the Shanghai Cooperation Organisation coming up, and India has apparently invited one of the Pakistani officials to attend that, the foreign minister, I think. That may or may not result, given that Pakistan has said all these things are in abeyance, so that remains to be seen as well. But there is a third possibility, and that is back-channel communications. Yeah. Sometimes both India and Pakistan have these interlocutors who talk to each other. Nobody knows what's going on or what they say. That's another possibility.
Christopher, what about China and Beijing? Could the leadership there emerge as a mediator? China holds good political and commercial relations with Pakistan, and relations with New Delhi, I've got to say, are starting to improve. Can Beijing help de-escalate these tensions and prevent a slide into perhaps the worst-case scenario, which would be a fully fledged conflict?
Yeah, it's an interesting one with China because whenever we use that word mediate, it just doesn't resonate with India. They're not interested in any mediation. However, in terms of influence, China could influence the situation both positively and negatively. The China-India border is very long, over 3,000 kilometres, 3 sections, and there's some serious disputes in 2 of them, and particularly on the western sector, which includes Aksai Chin. There's now 100,000 Indian and Chinese soldiers up there patrolling what's called the line of actual control, and that is a pressure point that China could use against India in the event of India, Pakistan having some hostilities. So there's that aspect. The trade aspect is also important. India has a trade deficit with China, but the trade between them is very significant. And the third thing is that China and Pakistan consider themselves to be ironclad brothers with a friendship closer than gums and teeth, all weather friends. And so China could actually moderate some of the Pakistani behaviour as well. So they're probably the only nation that can play a really significant positive and negative role in terms of India-Pakistan relations at the moment.
Christopher, from India's standpoint, if national security perhaps is now paramount in terms of the agenda, are trade talks with the United States and tariff-proofing the economy, have they been suddenly deprioritised?
Oh, look, I'm not in a position to comment on that, actually, Sri, but I think it's very important. I know our nation is also trying to have our tariffs reduced by the United States. And the number of times the United States talk about deals, it's just another one in the pipeline. And we did see that the inference was that the latest deal might be with a democracy, and they're waiting for that to be approved by the parliament and so on, which might suggest India. So I think it's significant because the US-India relationship is very close, but it's nowhere near as close as it's more transactional than a lot of other relationships. For example, in the past, 1971 war between India and Pakistan, India had an almost ironclad guarantee from the Soviet Union that if China was to do anything to support Pakistan, the Soviet Union would do something to aid India on the northern disputed, as it was then, USSR-China border. Now, the relationship with the US is nowhere near as close, and the Indians can't rely on the US the way that they could rely on the Soviet Union. So it's more transactional.
Or looked upon in a different way, if defence is so central to a US-India bilateral trade deal, and India is rearming regardless of who the supplier is, and for example it's buying Rafale fighter jets from France, then is a trade deal and pursuing a trade deal regardless of the security imperatives, is that integral to ensuring national security in the short, medium to longer term?
I don't think it's an integral, but I think it is helpful. Yes, clearly anything you can do to enhance your national interest and your defence capabilities is to your benefit, and you will take whatever you can get wherever you can get it. So the Russians are still selling a lot of arms and armaments to India, for example, and they're getting material from the United States, and they're getting these Rafales from France and so on. So India will, and they're also, by the way, making things in India. They've got this Make in India project where they're trying to not only make arms and ammunition for themselves, but sell some of that, and they're now doing that. They've sold some BrahMos missiles to the Philippines, for example. So they will do what's in their national interest, and if that means getting kit from the US, they will do that.
Christopher, it's interesting to hear from ranking members of the administration and talking about how closely aligned Prime Minister Modi and President Trump are on multiple issues. So do you think ultimately Washington is going to have to take sides in the event of a major escalation between Pakistan and India as a matter of foreign policy and ally more closely to India as a trusted security partner in this region?
Well, if we get down to the absolutes, yes, I'd say the US will probably support India over Pakistan, partly because of China as well. And if we do get down to absolutes, it's going to be China supporting Pakistan and the US supporting India. But there's a lot of grey in between there, and the part of the problem too is that I'm not sure the US is still yet over their withdrawal from Afghanistan, and that has left a bit of a nasty taste in their mouth concerning Pakistan, I think, and they may be a little reluctant to engage with Pakistan in the way that they are with India. The other one, of course, is the economies, and the Pakistan economy is only growing at about 2.7%, and it's got some serious challenges, including not taxing enough people or entities to make money for the state coffers. India, on the other hand, is, well, way in the 7% growth range, and there's far more economic opportunities with India. And if you're into deals, one of the deals is to sell things and buy things and trade things. And so the US-India relationship is much more of interest to the United States than the US-Pakistan relationship.
Yes, Christopher, and J.D. Vance's visit was really emblematic of that, and it is understood that Defence Secretary Hegseth may be the next ranking Trump administration official to visit India, preparing the ground maybe for President Trump himself, who may visit to discuss about expanding the Quad Security Alliance. This is very germane to the issue. We don't know if India-Pakistan relations will be better or worse by then, but is a trade deal and these high-profile visits ultimately going to cement a closer US-India security partnership? Is that where we're heading?
I think it will, Sri, but it's not going to be an alliance. India's not going to make an alliance with the United States in the way that Australia has currently, anyway, an alliance with the United States. They will have a closer relationship and they'll do some things together, including training, but they're not going to be allies. India will do what's in its national interests, and it will buy oil from Russia, much to the chagrin of the United States. And it will also buy things from the United States, and it will continue to trade with China and so on. So India has had this policy of non-alignment, autonomy, and it will continue to do what it wants to do in terms of its national interests. So yes, they'll get closer, but it's not going to be an alliance. There'll be things like the Quad, but there'll be various other activities as well.
Understood. Christopher, we've got to leave it there, sir. Thank you very much indeed for those insights and analysis. Dr. Christopher Snowden there. Thank you. Coming up on the programme, we will assess the market reaction here in Asia to Trump's softening stance on auto tariffs. We'll also take a look at ride-hailing app Gojek's earnings report card. Do stay tuned. Welcome back. And the Japanese markets have returned from a public holiday. And let's bring in Lin now, who's tracking the reaction there to President Trump's decision of lowering the auto tariff burden. Hi, Lin.
Good morning to you, Sri. We have seen a bit of a partial offset here in terms of the auto tariffs. However, the major automakers out of Japan and South Korea, for that matter, are all lower and underperforming against the respective indices, bar one company, Suzuki, which of course has exited out of the US market and is effectively much more of an India play here as well. Keeping in mind, though, that in terms of what was announced, that we had seen reports in the week or two leading up all of that, and we had seen price reaction to the twists and turns in terms of US tariff policy as well. In terms of what these sort of offsets entail, one thing to note is that it only applies to foreign automakers that assemble in the United States. It clarifies that companies can avoid overlapping tariffs, so this de-stacking, and also says that companies can partially reimburse foreign auto parts for, again, cars that are assembled in the United States. And that's why we're seeing, in terms of the Japanese automakers, particularly the smaller companies here, Mazda as well as Subaru, in the morning session down more than some of these other auto companies, because most of their supply chains are outside of the United States. In terms of the reaction, we heard from one of the major representative bodies. Also, we've heard from analysts as well, who say that this is a really good first step. It's a recognition of the highly integrated and complex nature of the supply base, but that more needs to be done. And certainly the major auto group there also highlighting the fact that one of the major concerns for these companies is the heightened uncertainty here, because this is a slow-moving industry that makes decisions 2-3 years in advance. Sri.
Lynn, thank you very much indeed for that. Let's take the narrative to Southeast Asia and some milestone profitability stories now for Indonesia's super app GoTo and Nasdaq-listed Grab. JP Ong has the details.
Now, it's important, Sri, to compare and contrast these two just because they both released earnings within about 12 hours of each other. Of course, GoTo releasing last night, Grab earlier on at about 7 a.m. Singapore, Hong Kong timing, because they are the two big ride-hailing apps and two tech giants in Southeast Asia. So we'll start off with Grab because they on the surface, they had a better, relatively better report card actually, with revenues for Grab in the first quarter growing by about 18% on a year-on-year basis. We also adjusted EBITDA profitable yet again, up 71% as compared to first quarter of 2024. Net profit for Grab, though, also for the third straight quarter, Sri, actually coming in positive, about $10 million. So the bottom line actually quite rosy for Grab. And you'll also see that when you break down the EBITDA by segment actually for Grab, which is the preferred profitability metric actually, you'll see here that deliveries and mobility were positive, but they saw financial services still EBITDA negative of about $30 million. Now that brings us to GoTo actually, which again did turn EBITDA positive once again for their first quarter, but again the net profitability for GoTo actually coming in negative still. So they've got a ways to go there. However, you'll notice that for GoTo actually that their EBITDA, at least for their quarterly fintech group, actually came in positive for the second straight quarter at about 47 billion rupiah, which means fintech has turned profitable more quickly for GoTo actually as compared to Grab because they've started to roll out a lot of consumer loans and really rolling out digital banking for Indonesia's 270 million population. Now, the other reason why we're comparing and contrasting these two, Sri, there have been a lot of rumors and speculations that Grab and GoTo might actually merge and that these talks have been out there. But we did speak to Peter Uy and Simon Ho, the CFOs of Grab and GoTo respectively, over the course of an hour earlier this morning, and both of them said that they do not want to comment on media speculation, thus also trying to play down and shoot down any talk of a merger. But again, the murmurs and the whispers of a possible combination are out there, and again, drawing more interest in these two particular companies that seem to be turning a bit more profitable, Sri.
Yeah, it'd be interesting if that is realized and the scale that they can realize and the value that they can unlock in this intensely competitive market across those verticals. JP, excellent. Thank you very much indeed for that. Coming up on the programme, we will focus on India's commercial real estate space. Embassy REIT beats its own guidance and has even bigger plans for FY26. We'll hear from their CEO next on these plans and the future after this break. Welcome back, everyone. We are counting down to the market open in India, which kicks off in about 15 minutes' time. Let's give you a sense of what to expect with the futures picture. Gift Nifty equity futures are suggesting an opening number in the region of 24,323. So little changed is where we are expected to kick off, comparing with where we left off with the Nifty 50 at 24,335. Yesterday's close. Dollar rupee exchange rate at 85.1320. Right, let's turn our attention to real estate now. Embassy REIT wrapping up a FY25 on a strong note with revenue and net operating income, each growing 10% to a record high and delivering better than expected distributions. India's first listed REIT and one of the biggest players in Asia's office REIT space, Embassy signed nearly 100 deals last year, leasing 6.6 million square feet. Companies eyeing double-digit distribution growth in FY26 and is on the lookout for new acquisition opportunities to fuel expansion. Let's bring in Ritvik Bhattacharjee now, who is the CEO of Embassy REIT. Ritvik, great to have you on the programme. Just give us your thoughts on the outlook. 2024 broadly saw office rents surge by a record 4 to 8% in India's top cities. For Embassy, do you think 2025 will surpass that, or should we expect some markets to underperform given the state that we're in terms of global economic uncertainty?
Good morning, Sri, and thank you very much for having me on the show.
Our pleasure.
First of all, let me just say that we are delighted with our performance this last year. We, as you said, we grew revenue 10%, and NOI 10%, but most importantly, we grew our distributions for the first time in 6 years by 8%, and we are projecting double-digit growth in FY26. And that's really predicated on the fact that Indian office right now has never been in a stronger place. I think coming back from the pandemic, like you said, rents have grown in markets. We're probably looking at sort of single-digit rents, but what we capitalize on and our strength at Embassy is that we have access to the best properties in India's best micro markets. Last year was a record absorption year, actually, 75 million square feet across India. That's supposed to grow 10% this year, and that's anchored by the GCCs and the global companies that continue to look at India as a hotbed of talent and with the world-class real estate that companies like ours provide. So I am extremely confident in our ability to capitalize on that, which is why we're giving the guidance that we are. We're thinking about revenue growing in the double digits, as well as NOI and distributions at the midpoint coming in at 10%. So a lot to look forward to, and we couldn't be happy with the results that we have right now.
Ritvik, what then does that mean for current yield and projected growth rates, let's say over a 5-year time frame? And just elaborate for us and give us a bit more colour on the outlook for dividend and distributions. And is that picture going to be intact? And is it set for growth despite all the uncertainty?
As I mentioned, we delivered 8% growth for the first time in our history, and I think that sets a very constructive framework for us to deliver the double-digit growth that we've been promising investors, and investors have been waiting for. That's anchored effectively by the portfolio that is currently running at 91% by value, that at some point over the next year will rise to around 94% by value. On the back of that, we have around 6 million square feet of development in India's best office markets. That's also going to come online. That's 18% yield on cost. That is going to give you close to 30% sort of NOI CAGR growth. And on top of that, that should all drive down, if you look at the way we've been able to finance our business at the most attractive rates of capital, should definitely translate to double-digit distribution growth year on year, which frankly has been a long time coming. If you think about the fact that this has been a new product in India, there has been a lot of interest costs that we've had to bear to actually finance this business. We are now bearing the fruit of this development, of the growth, and we feel very comfortable about the distribution growth going forward.
You've got a lot of a very impressive portfolio of global firms who are tenants, Ritvik. Do you think global firms are increasingly looking at India as a strategic office location, and particularly evident in technology and finance? Is that set to continue at perhaps even a faster pace, given the narrative surrounding tariffs and given in the past few weeks, we've been hearing some whispers of Tesla looking to enter India, Apple shifting iPhone assembly to India from China. And of course, if and when they do come, they will need to lease office space.
Oh, undoubtedly, Sri. India is such a fertile hunting ground for global companies right now. And yes, there is a little bit of uncertainty around the tariffs. But again, it's the administration shown that it's open to negotiation. And it doesn't mask the bigger picture that India remains incredibly attractive for global companies. If you look at our largest tenant, that's JP Morgan, and the world's largest bank is doing some incredible work in our portfolio across its entire line of business. We've got companies like Novo Nordisk that's doing some stellar R&D work in our business. And I think we are very well diversified in terms of geography, in terms of location. And I think, short-term blips like tariffs will obviously cause uncertainty and a fair amount of angst in the market. But it doesn't take away from the fundamental fact that India and portfolios like ours are such attractive destinations because of the talent, because of the readiness of the population that's willing to work, do some cutting-edge stuff in technology, in financial services. And it's a population that's young, that's hungry, that's eager to work. And if you look at the kind of real estate that we provide them, it's not a surprise that we are seeing the levels of absorption and the conversations we're having with global captives the world over.
Ritvik, we'll get into Tier 2 and Tier 3 cities and the opportunity there, but in the premium office space segment, I hear that's intensifying, especially in Mumbai, BKC. And again, there are reports that Tesla is picking up office space in that vicinity. Delhi CBD, Connaught Place, that's also in demand. Can you give us a sense of where that leaves the per square foot monthly rentals, and what sort of upside are you seeing?
That's a great question. We own a marquee asset in BKC that is rented out to one of the big technology majors. And this is obviously a market that's premium, that has the world's best companies that really are willing to pay the premium rents. I think it sort of depends primarily on the location that you're in. In Bangalore, for example, at some point in time, you run out of space. And clearly in these micro markets, then you've got to think about either adjusting your rents or thinking about new supply coming in. In Bangalore, for example, we own, the best assets in micro markets where simply we are the market. And what we do is we are able to control rents because we have the ability to charge a premium, and all the companies that are coming in there for the talent that you get in a 100-acre park that's totaling 15 million square feet like Embassy Manyata, we get to actually charge a premium on rents because it is simply the best and the only game in town. You think about the talent that's available, you've got 100,000 people working in that park, the likes of Novo Nordisk, you've got, your big companies, your Lowe's of the world, everyone sitting in there. That's a hotbed of activity. So
yes,
the rent at this point in time in a country like India is really just one very small factor. What they look for is the talent and the ability to retain that talent.
Is there opportunity in Tier 2 and Tier 3 cities?
Over time, there is opportunity in Tier 2 and Tier 3 cities, but what we see right now as a pattern is a lot of people migrate towards cities like Bangalore, where there's ample opportunities both professionally, it's a great education environment, it's a lifestyle where you can interact with a lot of people your age. You're looking at a young workforce looking for opportunity. And I think that's where the capital comes as well. If you look at why the big companies like your JP Morgans, your Swiss Re's, your Novo Nordisks of the world are in India, they come to Bangalore. Bangalore is India's largest office market. It's a 240 million square feet market on an 800 million office stock. These are the bigger markets that over the next few years will continue to dominate the office supply game and where most of the action is going to take place. But yes, over time, you will obviously see development percolate down into Tier 2 and Tier 3 cities in India as well.
Understood. Ritvik, Embassy does have a hospitality flavour within the broader portfolio, which comprises 4 operational hotels, business hotels, 2 under construction hotels. Do you fear demand could be at risk? And do you foresee any softening in the hospitality space, given the recent deterioration in Indo-Pak relations and the terrible Pahalgam attacks?
Yeah, first of all, our thoughts with everyone affected by this horrific tragedy. It's something that really puts a lot in perspective. So our hearts really go out to everyone on that. We have not seen any major impact on our business as a result of this. And I think, we operate a business hotel segment that's, highly in demand and is doing very well. We did 250 crores in EBITDA. That was up 25% last year, and occupancy and every RevPAR and ADRs are all on the upswing quite significantly. We don't see any sort of major impact to our business because they are attached to our parks. The hotel markets around us tend to be incredibly underpenetrated. And I think there is a clear need for the businesses to make sure that they have the ability for their executives to stay in hotels, to have the accommodations that they need, alongside sort of the infrastructure like assets that we have. We obviously don't operate in the luxury segment, but I think by all the accounts that I'm also hearing at this point in time, business continues to boom. And, if you go to cities like Mumbai and Delhi at this point in time, you don't really see much. It's very hard to get a room at this point sometimes.
Interesting. Thank you for addressing that sensitive point, Ritwik. In terms of future opportunities, given the huge growth that we've been seeing in quick commerce, are there opportunities for Embassy REIT to get into logistics, warehousing, and then given the AI boom that is just in its infancy, arguably, what about data or cloud center assets in India or elsewhere?
Great question, Sri. I think fundamentally, the most REITable asset in India has been the office sector, because that's where all the rents have really been able to allow us to distribute cash and run a REIT effectively. A REIT, for the uninitiated, has two main components. One is you have to pay out 90% of your cash flows, and you must have 80% of your portfolio by value be rent generating. The office sector has been the best sector for that. Logistics in India and warehousing are sectors that do have promise, but at this point in time, I don't think give you the economics to really go out there and build a REITable platform. So I don't think that's an area we really want to get into. We do mull over data centers sometimes, but at this point in time, I think given that we've just been able to sort of put together such a robust performance on distributions, on growth, and we're very excited by the potential and the performance of the office portfolio, I think we would sort of keep our energy and our execution focus on office for the time being.
Understood. Ritwik, your predecessor, Arvind Maiya, had to step down as CEO last November after SEBI said he was unfit for the role. What reassurance can you offer investors that Embassy REIT is being audited, managed, and run in a manner that is consistent with fiduciary duties and shareholder interests?
Yeah, first of all, Arvind Maiya's situation was most unfortunate, and from a personal perspective, obviously wish him the very best. Embassy REIT has always prided itself on the strictest form of corporate governance, and I think the situation that came to light last year was not at the REIT itself. And we want to assure everyone that the board, the management team, works for the interest of all our unit holders and every other stakeholder that we have. We're 92% held by the public. Your vote counts immensely in every single strategic decision that we make. There is the ability, we think about governance all the time, and I think going forward, we want to make sure that everyone, including our regulators, the public, and every stakeholder understands that we work in their interests.
Ritwik, I appreciate that answer and that response. We thank you very much indeed for your time and talking to us about the outlook and the strategy at Embassy REIT. Thank you, Ritwik Bhattacharjee there. All the best. Right, we are counting down to the market open in Mumbai. We return in 2 minutes. Welcome back. Let's take a look at the Indian markets. The benchmark Nifty 50 drifting just very modestly lower by about 0.2%, 24,290. Let's give you a dollar rupee exchange rate at 85.0675. And let's take a closer look at some of the movers in the Indian markets today. Shares of Adani Green Energy are in focus after the Indian renewable energy company said that it plans to spend $3.64 billion to add 5 gigawatts of clean energy in the current financial year. This comes days after Adani Green's independent review of U.S. charges against it found no irregularities. Remember, they were accused of bribery and misleading U.S. investors. The stock down by 0.8%. Let's take a look at shares of Bajaj Finance, the non-banking financial company, reporting a 17% rise in net profit thanks to healthy loan growth. Profits include those of its subsidiary Bajaj Housing Finance as well. Strong credit demand in India also boosted Bajaj Finance's assets under management by 26% on year. The stock, however, down by almost 5%. Switching to sports now. The annual Indian Premier Cricket League is in full swing. Royal Challengers of Bangalore are table leaders so far, followed by the Mumbai Indians. But what's making headlines globally in the world of cricket is a 14-year-old boy who is playing in the league. Vaibhav Suryavanshi of the Rajasthan Royals made history by scoring 100 runs on just 35 balls. That made him the youngest player in the history of the 20-over format to do so. The league has fueled the rise of many stars like Suryavanshi. It's also leading to tech evolution in cricket and fantasy sports in India. Let's bring in Alok Samtani now, who is partner at Centre Court Capital, joins us on the sidelines of Sports, Technology, Finance Asia, the Leadership Dialogue here in Singapore. Alok, welcome to Singapore and welcome to Inside India. Thank you for joining me. IPL cricket dominates the landscape in India, without a doubt, whether it's online betting, broadcasting rights or even esports. Just give us a flavour of where Centre Court is positioning.
Hi, Sri. Thank you for having me. Centre Court is a venture capital fund looking at investing into sports technology, fitness, wellness, and gaming and esports businesses. Based in India, but we look at investing largely in India, but also look at a few selective investments overseas.
Let's talk about how you're monetizing AI, and talk about how Quidditch Innovation Labs, Stupa Sports Analytics, you're backing both of these startups. How are they using technology and AI to augment the viewing experience? And how is Centre Court monetizing this?
Great. So both Quidditch and Stupa are using technology to be able to help two different things. One, Quidditch is helping monetize the broadcasting space, right? So they are making, or they have innovative technology products which help viewers, fans consume sport in a much more better and much more deeper sort of form. Some of their products help provide analytics, broadcast content to the viewer. So they sit in between the live feed and what you see on television, right? Providing a lot of innovation, technology, effects from various sort of things they bring to you as a viewer.
Is online betting...
Stupa on the other side...
Sorry, go ahead.
Stupa on the other side is working with a few national federations in racket sports. Started with table tennis, trying to digitize the way federations organize tournaments, provide analytics and streaming to racket sports. They started with table tennis, and now are expanding to other sports, including badminton and a few other emerging sports as well.
Alok, esports and online betting, is that a natural progression of where we are today? And are they areas that Centre Court is looking at?
Yes, it is it is a huge space, but for us at Centre Court Capital, we don't look at the betting space really. So for us, it's more technology businesses that help sports and gaming companies.
But it's not just cricket, is it? You've got Kabaddi, 120 million fans, football, 85 million fans, and indigenous sports like Kho-Kho also gaining ground. And now 90% of fans follow multiple sports. This is very interesting. The field is becoming more diverse. Where does that leave, and what does that mean for Centre Court's strategy?
No, absolutely. I mean, India was earlier known for cricket largely, right? But we've seen other sports also growing. Of course, cricket leads it by a wide margin, but as you spoke of Kabaddi and football and local sports, I guess there is a lot more happening in those as well. And, you know, each of these sports are going to scale up. So for us at Centre Court Capital, we look at investing into sports tech companies which can work across sports. They may be deep in one, but then growing from one sport to the other. A clear example of this is Quidditch that we spoke of earlier.
Yes.
They were deep in cricket, are still deep in cricket, working with the IPL, working with the BCCI and the ICC, but now have expanded within cricket to Australia and England, and now trying to take the same products to other sports as well. So we're seeing that natural progression from starting with cricket, but now taking those to other sports.
Right, and those other sports, in terms of the mix and the flavour of the startups where Centre Court could be investing in, are badminton, pickleball, and you're looking at the European markets as well. Alok, just tell me how much progress or what sort of target acquisitions you have in mind there.
So yes, we are looking at companies. In fact, Quidditch has, like I said, expanded to Australia and England. Stupa is already working with federations in Europe. We've also invested in a couple of US companies on the sports technology side. One of them's sort of in golf, and now expanding that to basketball and other sports as well. So yeah, we're looking at expanding both across geographies and across sports.
And just back to India, Alok, just to round off, there's still enormous opportunity in this enormous sports market, $130 billion and rising. What do brands and startups need to do to capture sports fans in rural markets and amongst a growing female demographic? How much opportunity lies there?
So it's a huge space. The rural markets, as well as women's sport, both of them, right? I guess for sports tech companies, I think they need to try and create products or be able to connect with sports viewers and fans across these markets. Let's take Kabaddi as an example. Kabaddi is an Indian sport. But the second largest sort of in India, still below cricket, but has seen a huge growth since they launched the Pro Kabaddi League about 11 years ago. We've seen more franchises, we've seen that sport grow.
Yes.
Women's sport as well, we saw the WPL, the Women's Premier League, launch a few years ago. And that's had a good start as well, and I'm sure that's going to grow following the success of the Indian Premier League.
Fantastic. great future opportunities. Alok, we've got to leave it there, sir. Thank you very much indeed for joining me on Inside India. Alok Samtani there from Centre Court Capital. I'm afraid that's all the time that we have today on Inside India. Do keep watching CNBC. Dan Murphy in Access Middle East is coming up next.